When we look at investment trends in the Australian insurance industry, let's break it down separately into life insurance and general insurance. On the life insurance side, that part of the market's been dominated by the big banks historically, but now they can't get out of that market quick enough. So we've seen overseas investors coming in and picking up the former businesses of ANZ and the troubled CommInsure business from CBA. So you can see why Australia is an attractive market for overseas investors because we're regulated and we have a good economy. But you do wonder, what are they missing that the locals know? After all, when was the last time you checked your life insurance? Now on the general insurance side of things, we have a lot of market concentration at the big end of town. In fact, the Productivity Commission has just said that there's a lot of camouflage at that top end and they want more competition in the market. But we have over 80 general insurers and there are plenty of opportunities there for overseas investors at the smaller end of the market. Picking up a smaller operator who's currently doing one line of business is a good way for an overseas operator to come in and expand that business into multiple lines of business. Now in terms of trends in the insurance industry, it's all about regulation, regulation, regulation. There's regulation which is almost upon us and that which is upon us now. In terms of what's coming, we know things like unfair contracts legislation is coming for general insurance. So retail insurers in particular need to be mindful of that. We also know that ASIC's product intervention power is almost upon us. So that means that existing players need to be thinking about their target market. And overseas investors coming into the market need to think about, does their product meet the needs of Australian consumers? If not, ASIC will step in and take action. Finally, there's the regulation which is upon us, and that's the Royal Commission. Insurers are being asked to provide information to the Royal Commission on a voluntary basis at the moment. We just don't know where that will lead. All insurers are keeping their fingers crossed that this is all about the banks rather than the insurance industry.
Spending in infrastructure in Australia is at an all-time high, particularly in New South Wales. That spend traverses a whole range of areas, including transport, so roads and rail, but also residential projects and commercial projects as well, office spaces. As a result of that real boom in the infrastructure area, we're seeing a growth in claims, not surprisingly. Where we're seeing that growth is on contracts works policies, but also claims against professionals, so engineers, architects, surveyors, etc. And in addition to that, because of the large number of projects that are taking place, we're seeing personal injury claims as well, workers being injured on construction sites. Another area of growth is in cladding claims and claims arising from flammable cladding materials. The background to that is obviously of a number of very high publicity and serious fires that have occurred in both the UK and in Australia. And as a result, there's a particular focus, including a regulatory focus in this area. In terms of where we're really expecting those claims to emerge, it's not just against the builders and those on the ground. It includes as well those in the supply chain, so the distributors, the suppliers, but also the manufacturers of these products. Insurers are embracing technology and the digital age, and this is really starting to impact the claims handling space. Already, artificial intelligence and robotics play a significant role in claims handling for personal lines claims, but I think as we go on, we'll start to see that kind of technology really impacting how more significant claims are handled.